Hi and welcome to my channel. If you spent the last 20 or 30 years building wealth, there's something happening right now that is quietly reducing it. Not because you've made mistakes, not because you've done anything wrong, but because of how the system works. Welcome to the 2% brief. And this is where most people get this wrong. My name is Richard Suchoszewski. I've spent over 4 decades working in financial services, advising individuals, businesses and investors through multiple cycles. And one thing becomes very clear over time. Most people don't lose money because they make bad decisions. They lose it because they misunderstand what is actually happening. And right now, that misunderstanding is widespread. Because what's changing today isn't just markets, it's the structure behind them. Currencies are being diluted, debt is expanding, and purchasing power is quietly being transferred away from those who don't see it towards those who do. And the problem is this: it doesn't feel dramatic. It feels gradual, almost invisible, until it isn't. Now there's a conversation that should be happening, but it isn't. Not on mainstream financial media, not on most YouTube channels. And that gap is exactly why this channel exists. Now just to be clear, I'm not here to tell you what to buy, and frankly, that's not what you need anyway. What I am here to do is show you how to think about what's happening to your money so you can make better decisions for yourself. Now that's where the idea of the 2% comes in. Not as a group of people, but as a way of thinking. Because in every cycle, there's a small number of people who understand the shift early, and a much larger number who only recognize it after it's already happened. And this channel is about helping you see it earlier. So in this video, I want to walk you through what's actually changing, why it matters, and what you should be thinking about as a result. Because once you understand this, you start making very different decisions. After 4 decades in this industry, one thing has become very clear to me. There's a conversation that should be happening, but isn't. It's not about what stock is going up next week, and it's not about whether gold rises by $100 or falls by $100. It's about something much more fundamental. Why your purchasing power is being eroded. Why savers are being punished. And why the strategies that worked for the previous generation, my generation, are becoming increasingly unreliable. And at the center of all this is one thing: debt. Right now, the United States national debt is over $39 trillion, and it's rising. But this isn't just an American issue. The UK, Europe, Australia, most developed economies are on the same path. Now here's the part that matters. If debt continues to rise, currencies eventually lose money. It's not a forecast, it's not a theory. It's basic arithmetic. And when currencies weaken, you don't see it immediately in a headline. You feel it gradually. In your food bill, in your energy costs, in how your income actually stretches or doesn't. That's inflation. Not the official number, the real one. And governments know this. They'll talk about controlling spending, sure. They'll talk about discipline. But the reality is this: in democratic systems, spending continues. Because reducing it comes at a political cost. They won't get elected. So the debt grows. And over time, the currency adjusts. So the real question becomes, what do you actually do about it? Because most people don't even recognize that this is happening. They're reacting to what they see in the news. while the real change is already happening underneath. There are only a few ways people can protect themselves from this, and most people either ignore them or misunderstand how they actually work. I call it the 3 pillars. The first is precious metals, gold and silver, which have preserved wealth for thousands of years. But here's what most people misunderstand. They protect wealth. They don't build it. And that's an important distinction, and one which, to be frank, gold bugs and silver bugs object to. The second is equities and real assets. That includes businesses, but also property. Assets that can generate income and adjust with inflation through capital growth over time. Some become more valuable, others become more exposed, especially when financing costs rise. So you're looking for strong balance sheets, real underlying assets and value, and pricing power. Companies and assets that can operate within inflation, not be damaged by it. And that's where the opportunity sits. And increasingly, people are also looking at digital assets, particularly Bitcoin. It's still evolving, it's more volatile, and it doesn't behave like traditional assets, but it's now part of the financial landscape, whether people accept it or not. The key is understanding where it fits, not treating it as a substitute for everything. And the third pillar is understanding where the world is going next. And that brings us to something most people are underestimating: artificial intelligence. AI isn't just another technology cycle. It's not like the internet or mobile. This is different because it doesn't just enhance productivity, it replaces it. Let me say that again. It doesn't just enhance productivity, it replaces it. We're going to see significant disruption in the labour market. Some companies will benefit enormously from this shift. Others will quietly become irrelevant. And if you don't understand that distinction, you risk being positioned on the wrong side of it. So let me be very clear about what the 2% brief actually is. On this channel, I'm going to show you what's happening, the macro trends, the underlying structure, and why it matters. And if you want to understand this properly, make sure you're subscribed, because this builds over time. But understanding the trend is only half the equation. The real value is knowing what to do with it. Which sectors, what type of companies, when to act, and when not to. And that's where my Substack comes in. On YouTube, you get the framework. Inside the Substack, particularly the inner circle, you'll get the deeper analysis. The companies I'm watching, the sectors I believe will benefit, and the way I think about positioning capital in this environment. Not opinions, not guesswork, just a structured way of looking at what's actually happening. Now, over the last couple of months, I've built that Substack from zero, and it's already growing, because there are people out there who recognize this shift. People who have capital, who have worked hard for what they've built, and who want a clearer framework for what comes next. And if that sounds like you, you're in the right place. Now, if this way of thinking makes sense to you, subscribe. And if you know someone who's trying to protect what they've built, send this video link to them, because most people won't see this coming. And over time, that's the difference between the 98% and the 2%. And if you want to go deeper, you'll find more detail on Substack, links below. And if you'd like more context around these ideas, take a look at the videos on screen now. They'll help build the bigger picture. Now, thank you for watching. I do appreciate it, and I hope to connect with you in the comments below.